Loans. What are they? Let's dive into the basics of loans and understand their significance in our financial lives. A loan is like a financial agreement. Essentially, it's a contract between a borrower and a lender. The lender provides the borrower with a certain amount of money, which the borrower agrees to repay over a specified period. You borrow money from a lender. This lender could be a bank, a credit union, or even an individual. The key point is that the lender trusts you to repay the borrowed amount. You promise to pay it back. This promise is often formalized through a written agreement or contract which outlines the terms and conditions of the loan. This includes the original amount, or principal. The principal is the initial sum of money that you borrow and agree to repay. You also pay extra, which is called interest. Interest is the cost of borrowing the money, and it is usually expressed as a percentage of the principal. Think of it like renting money. Just as you would pay rent to live in a house, you pay interest to use the lender's money. You use it for a while and you pay rent or interest for that privilege. This interest can be a fixed rate, meaning it stays the same throughout the loan term, or a variable rate, which can change over time. The loan term is how long you have to repay. This period can range from a few months to several years, depending on the type of loan and the agreement with the lender. The monthly payment is how much you pay each month. This payment typically includes both a portion of the principal and the interest. Loans can be helpful, but they can also lead to debt. It's important to borrow responsibly and ensure that you can meet the repayment terms. Understanding loans is crucial before borrowing. Knowing the terms, interest rates, and repayment schedule can help you avoid financial pitfalls. It helps you make smart financial decisions. By being informed, you can use loans to your advantage and achieve your financial goals without falling into unmanageable debt. There are many types of loans, each serves a different purpose. Personal loans are versatile. You can use them for anything like debt consolidation, home improvements, or unexpected expenses. Mortgage loans are for buying a home. They typically have longer terms and lower interest rates than other loans. Auto loans help you buy a vehicle. The car serves as collateral. If you fail to repay, the lender can take it back. Student loans finance education. They often have lower interest rates and flexible repayment options. Loans can be beneficial in many ways. They help you achieve goals sooner, like buying a home, getting an education, or starting a business venture. However, loans come with significant responsibilities. You have to make timely payments every month. Failure to do so can damage your credit score severely. Loans can also lead to debt, especially if you borrow more than you can afford to repay comfortably. It's crucial to borrow responsibly and plan ahead. Section 4. When loans come in handy, real-life examples. Let's look at examples of when each loan type might be used. Loans can be a powerful tool to help you achieve your financial goals, whether it's managing debt, buying a home, or investing in your education. A personal loan can consolidate high-interest debt. This means you can combine several debts into one single loan with a lower interest rate, making it easier to manage your monthly payments. Imagine having multiple credit card bills. Each bill comes with its own interest rate and due date, which can be overwhelming and stressful to keep track of. Consolidating them into a personal loan with a lower interest rate can save money. Not only does it simplify your finances, but it also reduces the total amount of interest you pay over time. A mortgage loan helps you buy your dream home. Homeownership is a significant milestone and a long-term investment that can provide stability and build wealth over time. Instead of waiting years to save up, you can get a mortgage. This allows you to move into your new home sooner and start enjoying the benefits of homeownership right away. You start building equity in your home with each payment. Equity is the portion of the home that you actually own, and it can increase over time as you pay down your mortgage and as the property value appreciates. An auto loan helps you buy a car for work or personal use. Whether you need a vehicle to commute to your job or for family activities, an auto loan can make it possible. Maybe your old car broke down and you need a reliable replacement. A new car can provide peace of mind and ensure you have dependable transportation. An auto loan can bridge the gap. It allows you to spread the cost of the car over several years, making it more affordable and easier to fit into your budget. Student loans finance your education and future career. Higher education can be expensive, but student loans make it possible to invest in your future. They cover tuition fees, books, and living expenses. This financial support allows you to focus on your studies and gain the skills and knowledge needed for your chosen career path, helping you focus on your studies without financial stress. By easing the burden of educational costs, student loans enable you to fully engage in your academic pursuits and prepare for a successful future. Section 5. Picking the perfect loan, a guide for first-timers. Choosing the right loan and lender is crucial. Start by understanding your financial situation. How much can you comfortably repay each month? Shop around and compare interest rates from different lenders. Banks, credit unions, and online lenders offer varying terms and conditions. Read the fine print carefully. Understand the interest rate, fees, and repayment terms before signing any agreement. Don't hesitate to ask questions. Section 6. Loan sharks and traps. Staying safe in the financial waters. Be wary of predatory lenders offering loans with extremely high interest rates or hidden fees. These loan sharks prey on individuals with poor credit or desperate financial situations. Avoid payday loans. They offer short-term loans with exorbitant interest rates, trapping borrowers in a cycle of debt. Remember, if a loan offer seems too good to be true, it probably is. Legitimate lenders provide clear and transparent loan terms. Section 7. Managing your loan, like a pro tips for success. Once you have a loan, manage it responsibly. This means understanding the terms and conditions of your loan agreement. Know your interest rate, repayment schedule, and any fees associated with your loan. Being well informed will help you avoid surprises and stay on top of your financial obligations. Make timely payments to avoid late fees and damage to your credit score. Setting up automatic payments or reminders can ensure you never miss a due date. Consistently paying on time not only helps you avoid penalties, but also builds a positive credit history, which can be beneficial for future financial endeavors. Create a budget to track your income and expenses. A well-planned budget helps you see where your money is going and identify areas where you can cut back. This can free up more funds for loan repayments and other important financial goals. Regularly reviewing and adjusting your budget ensures it remains effective and aligned with your financial situation. Allocate funds for loan repayments, ensuring you have enough to cover other financial obligations. Prioritize your loan payments in your budget to avoid falling behind. Consider using the envelope system or digital budgeting tools to manage your finances more effectively. This approach can help you stay organized and disciplined in your spending. If possible, make extra payments towards your loan principal. Even small additional payments can significantly reduce the total interest you pay over the life of the loan. This can shorten your repayment period and save you money in the long run. Check with your lender to ensure there are no prepayment penalties before making extra payments. It reduces the total interest paid over the loan term, saving you money in the long run. Achieving this milestone can provide a sense of accomplishment and financial freedom. Celebrate your progress and use it as motivation to continue managing your finances wisely. Remember, loans are financial tools. When used wisely, they can help you achieve significant life goals, such as buying a home, starting a business, or furthering your education. It's important to approach borrowing with a clear plan and a realistic understanding of your financial capabilities. Used wisely, they can help you achieve your goals. However, it's crucial to borrow only what you need and can afford to repay. Over-borrowing can lead to unnecessary debt and financial strain. Always consider the long-term impact of taking on a loan and make informed decisions, but irresponsible borrowing can lead to financial hardship. Missing payments or defaulting on a loan can have serious consequences, including damage to your credit score and legal action. It's essential to communicate with your lender if you're facing difficulties and explore options such as loan modification or refinancing to manage your debt more effectively.